want to start at the price action just as we open this morning, and want to kind of just point out what I saw. I was at an appointment today, so I was not able to be here this morning, but I kind of predicted that we were going to go up, just because kind of we're pointing up at open, and we definitely didn't. So it looks like they chopped a little bit at open, but you know, you got your 3-minute PAM indicator and it dropped. And then when you first open the market, you're gonna test these EMAs. Like, you're just gonna test them. That's gonna happen, and it's just part of the deal. So, you know, we test the EMAs, and what's going on right here is that the bulls are trying to, and bears for that matter, are trying to determine what they're going to do on the day. And as you saw, you know, there was a fight, but then right here it was decided. I mean, no doubt we're going down. Now, you had some couple of good moves here. If you would have got in right here, Pam kept you in the trade, never hitting her stop loss, never. And actually, you know, you could have waited for this retest to reject out. And I'm seeing that a lot with Pam, is that maybe not get into that first drop, and it could backfire on you, because sometimes Pam, that first drop is amazing because you are breaking a significant support level, temporary significant support level, but this one is actually aligned with a SATY support level. And so I drew this 413 as one of my levels, and you can see that we really played with that level a lot. And so we went up, we went down, we went up, and then finally about right here. And what are we doing? What is this price action showing you in your head? We have a swing low, we have a swing high, and then we get another swing low that's lower, and we have a lower swing high. And it kind of maybe goes a little bit above right there, but that's still part of the swing high. So as you can tell, what the market's telling you is we're going to drop, or at least the trend right now saying we're going to drop, because that's what we're looking at. And do this. Yeah, there we go. Get more room. So then what happens? We go out, we test that 48, which is what we really do. We've already rejected off of this before, but we're going to go back up, retest the 48, and then once we retest that 48, we break through the 13 and we just dump. And let's say that you missed this move. Sometimes I don't even say get into this move, because it could be one of these moves. But what you're looking for is that retest. And if you wait for that retest right here, and look, it didn't, it actually found support, went up. Look again, it found support, went up, so you wouldn't have got in there. You're waiting on a retest to where it just cleanly rejects off of here. So it goes down, and then finally you get this good retest where it closes under here, goes a little bit up, and now that's where that entry would have been good. You could have got here, scalped here, because that's a 1.4 move. And then again right here, once you see it not touching that 48, it's not even getting close to it. In fact, it's rejecting off this SATY ATR level and then drops again. You know to stay in this trade. There's nothing that's telling you to get out of this trade. This is, if you start right here, or even if you started even right here, once you see it come back through that 48, and you're just making sure it's not going to hit that stop loss initially, so you just keep going down. And as you go down, you set your new stop loss to the swing high. So instead of waiting for Pam to reverse on you, put your stop loss right there, because if you take that, you know, you've got a 60 cent move, and yeah, that's not awesome, but you're locking in profits, and you're taking risk off the market. You don't have any risk again. And then if you see that we start going back up and make another rejection, guess what? enter again. Just enter again right there, or somewhere right around here. And then you want to follow that 13. So if you entered again right here, this is going to be 412.68, and you worked your way all the way down to 411.09. And I mean, that's a great trade. And there was this gap, and so what I talk about, these fair value gaps, down gaps don't get filled like up gaps do. Up gaps do get filled quite a bit, but the down gaps won't. But we went back into that gap a little bit, and we dropped down, and that was a sign saying, hey, the market's fine with this imbalance. It's okay. It doesn't really care about it. And what does it do? It drops even more. It never touches your 13. You're still in this trade. You go back up, you hit your 13, and then right about here, you break that 13, you probably get out of that trade. Right there when you start breaking it. And that's when I took my call. Based on a bunch of gamma Vanna stuff that I've been studying that doesn't work. Or at least for me it does not work, and I will never use it again. And then you go back up, and a lot of people will actually set the 48 as their stop loss, because if you set your 48 the stop loss up here, look what happens. It never ever gets touched. Never gets touched, not once. So this whole trade you're in the entire time because you left your 48 as your stop loss. And just look at this. It's never getting touched. And still, if you would have used your 48 as your stop loss today, you would have got in right here, took that signal. You had your crossover, so you know you're going to start a downtrend, or at least it's hinting to you that it's starting a downtrend. EMAs are pointing down, and this 48 never gets touched, not once. It almost gets touched there, and PAM's just throwing out all kinds of signals towards you, right? They're saying, oh, we're going to reverse, we're going to reverse, we're going to reverse. But the reason why I say is to watch your EMAs when you're using PAM is you want to see if your EMAs are getting violated to say that we are going to reverse that trend. And the 3-minute chart is great for that because it's so fast moving, but it's not as fast as the 1 minute. So you have time to let those EMAs get touched if they're going to. And right here, man, I probably would have got out of that trade right there, like in this area, and then made a re-entry when I saw that we rejected off that 48, broke through, and went right back down. And what did we do? We come back, we retest the 13. You know, the Bulls really tried hard here. They tried to make a move. But they rejected at that pre-market low of 410, and that's why I say always mark your pre-market lows. I always provide them to you. Make sure they're on your chart, and then we even broke yesterday's low of day, which I always put on my chart too, because look how significant that level is. The Bulls don't want to drop below this level. I mean, that's just not in their best interest, and so they're trying to stay above that level, but obviously it failed once again, not breaking the 48. And look at where we are. Let's just hypothetically say that we did not get out of this trade because we put that 48 as our stop loss. So you would have, let's say you got in at the last PAM signal, which would have been this one. That's 413.85. Nothing. All the way down to 407.77. Think about that move on a 70 delta that's paying 83 to 70 to 83 cents on the move per dollar. That's significant. That's about $500 per contract, $600 per contract. And if you trade multiple contracts, you can do the math on what you do. But look at our price action now. We're still having so much respect for our EMAs, and that's why I say the 13 and 48 are key. They're just key. Now, I could put a 21 in here, and what you would see is the 21's about right here, right? and that's what this is testing. It's testing that 21. So if you even wanted to have like a shorter stop loss, it's not a bad idea to throw the 21 in your chart right here, because the 21 is your mean. It's your mean reversion. Oftentimes when we're in these big old trends, we will what John Carter calls revert back to the mean, and we will go back to the 21, and we will either decide we're going to go up still, or we're going to go down. So having a 21 is not bad. I just kind of know where it is. It's in between your 13 and 48, and it's more close to your 13, obviously. And so I don't really have it on my chart, but I know that we're testing our 21s here, and I'm looking for that rejection. Now, as I've been looking at all this gamma and Vanna and delta hedging garbage, it was really pointing that this was going to be the move of the day, and that at 409 levels we were going to push off. And it looks like they tried, and I think maybe Icon's 217 puts of 50 million are having a big influence on today's market. I don't know if you read yesterday, but Carl Icahn put 50 million in put premiums yesterday on the market for a 217 expiry, and that means that most likely, I don't know if you've ever followed his trades, but he can definitely influence the market, and he did. So 1313, we are so far from this EMA now that we're definitely going to go back up here and touch it. And a lot of you guys would say, oh man, if we go outside of this box, I need to take the trade. I'm going to say don't do that, because when the trend is your friend, right? Everybody's heard that before, and it's the truest statement for a trend momentum reversal trader like us. Is the trend, once you get that reversal, is your friend. And we are just crashing. I mean, this is a complete dump. And one thing I want to show you is flow data. I figured out how to have my screens on everywhere. You'll see a bunch of work stuff. But so when I'm looking at flow, I'm looking at is there directional? This is a directional volume. It's not created. There's no spread. There's no multi-leg strategy. This is just a single volume greater than open interest move. And what that's saying is that it's basically pumping the market. So the volume of this is greater than the open interest on the actual stock. And that's significant, because that means there's a lot of trading, a lot of people putting good money into these positions. And when you have whales that are doing 104, 186, 102,000, they're not going to be wrong. They still can lose money. Don't get me wrong. They do. You'll see some whales, like I told you the other day, a 1.2 million zero DTE that they put at the low of the day, and it was a call, and they lost that 1.2 million position completely. And they lost it fast. They didn't even have time to probably sell, because it was out of the money. It was out of the money, and it was destroyed in a matter of like probably 10 minutes. So that 1.2 million was a loss for that whale. But what we're looking at when I'm talking about that flow, first I want to explain the market tide. So you look about 11:45 right here, which is 12:45 for you. I think this is definitely on my time frame. Yeah. So you see all this choppiness in the market tide, and this is just your daily put premiums in terms of the volume of that put premium, like how much is being bought and sold. Is it going up or is it going down? And so you get a couple of crossovers. So this morning, a little bit undecided on the market, but you just see that steady put premium just start going up, and you have that crossover, and your calls just go. I mean, you have massive call sell-off. So down to what? Negative 28 million right now. So what we started at, like on our 0 day, we've gone down 30 million in call volume than what we started the day with. That's very significant. And as you see these separate more and more and more, you're going to know that the market is very put heavy and you need to be looking at puts only. And you'll catch these, especially if you can get at these crossovers right here. That's whenever you want to start looking at puts. If you know it keeps trending like this, especially right here when we kind of took off at 12:30, and like I said, look, people got back from lunch. This is when people kind of go to lunch on the market. So dead, 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 dead. And then once the people got back from lunch, you saw that separation. The separation occurred, and we got a lot of put action in the marketplace. So the next thing I do, I don't really use hardly anything else on unusual wells. I use market tide, and I look at live flow. Hot chains will just tell you, you know, things that, you know, the hottest chains, and you can see what's the hottest right now, 410 spies. And you can even look at what's got the most premium on the market. SPX 7,000 puts. That's just a huge whale having, you know, a ridiculous amount of money. But that should tell you something right there. Both of these huge plays, these 433 million and 284 million, are on puts. They're on puts for next Friday. So where do you think the market's going to go if someone's putting 717 million on the market? Where it's most likely going down. But let's look at this. This is the most important thing you really do in my opinion in unusual wells. So I used to interpret this as a bullish signal, and they could be selling puts here, no doubt. They, you know, to sell the contracts of puts, but this also could be someone actually getting rid of their puts. They might have been taking profit, and then I try to find a call on this sheet, you know, that there's one, and that's literally it. There's only one call in the past 21 minutes on this market. Only one call. The rest, all put selling. Every one of them. I wonder if I got my filter on. I do. All right. So what I do on the filters, just if you ever want to set it up, I take off ETFs, ETNs, and then I will cast it out until Friday. You know, and if I really want to look at directional bias, I change that to 0, and I just look at everything that's closing today. You know, these are all 0 DTEs now. Everything's a 0 DTE. And what you want to look at is things like this. Not part of spreads, not part of legs, but this directional flow right here. 87,409 put, taken at 217. That's big, and you have several of these hitting the market. Several. Once again, selling puts, but they've combined this with the leg strategy, so it's a call debit spread. They're still saying the market's going to go down most likely. They're selling puts at 415, but they've also they're hedging their position by buying the puts at 414. So. And it's a debit spread, so most likely they're in agreement, even though it will say bullish on here. They're in agreement that this market's going down. Again, selling. They could be offloading positions because these are only singles. This is just a single, and so just understand that. Look at this data from today, and if you use unusual wells and you use the EMAs and those setups that I taught you, and I'm going to keep teaching you, you know, you're going to be good. And don't, like I did, you know, because I just started the group and I want to answer all the questions and, you know, about Vanna, Gamma, and all that stuff. And all that stuff is good. Don't get me wrong. Like, I'm sure there's useful things that you can do with those. But don't get caught up in all the data. The data is not for as much for retail traders as it is for market makers for these whales that you're seeing where they have to hedge against Vanna and Gamma and control certain things because their bonuses and all of the stuff that they get depend on that and how they keep the market where certain their bosses want to keep it. But if you looked at that and just followed your 13 EMA, what kind of day would you have had? I mean, we're down to, and I got destroyed on my calls. Destroyed. I'm going to let them swing because that they're just, I only took, I'm in a drawdown. I've for 3 of the past 4 days, I've had a losing day and trying to do all this delta gamma hedging stuff. I'm not messing with it anymore. I'm just going back to the simple trading style that I invented, or that I at least have contributed to, and we're sticking to that. And that's what I'm going to teach going forward. I'm not going to try to talk about delta, gamma, and all that good stuff. But because the thing that I'm kind of frustrated about on myself is that, you know, I'm missing a 6-point move that I know 100% certain that I would have been in. No doubt. And all of this would have kept me in. I would have never gotten shaken out. Because even though Squeeze Pro is giving you all kinds of wishy-washy symbols, you know, you're still not even at minus 100 on a lot of these moves. So, and your moves up are so tiny. I mean, this is probably 50, and you look at how strong your down moves are, and then it doesn't even go up into any momentum for bulls again. Nothing. I mean, this just tells you stay in your position. Don't get out. And watch what's going to happen. We are going to continue to drop. And another thing that I saw too this morning is there is ample manipulation in this market, because the only volume you really had was the start of the day, and then relative volume just kind of just disappeared. And you know, so that means there's not a lot of relative volume hitting the markets except on these big wicks down. And that was when bears were trying to, or when bulls were trying to push up, and then they would just come back in and destroy it. And now look, we're having one of our biggest drop down candles of the day. I started with a 70% delta, and it's probably in the 40% range right now. And like I said, I'll swing it just because it doesn't really matter. Because I only took the one position. When I'm in drawdowns, I undersize, and I don't take full positions anymore. I just undersize until I get my strategy back right, and really start, you know, taking those wins again. Because what I don't ever want to do is be trading bad and having my full positions of 10 contracts in, and then, you know, taking a hit like what I just did on this one today. I'm not going to do that. So yes, earlier at this mark, I had a long appointment today. I actually fell asleep when we were going up, and I woke up when we were down here, and I was like, what the heck? We broke the 13. I thought we were going to be moving up, and no, I woke up to being like right here. And once I saw SATY's put levels, I was like, yeah, it's not good. Because SATY's triggers, man, if you see that 409.14 and you see us going below it, and we go below it, and we come back up and retest, and then we reject, you can guarantee that we're probably going down to this level, and then that's when you ride your EMAs. So I don't think that this stops. I mean, we just had the squeeze that fired. So you got 1, 2, 3, 4 bars into the squeeze, and that was a huge volume candle. So that means that there is strong conviction for this to keep rolling down. But as we get further away from these EMAs, we will work our way back up. As you can see, you know, the market doesn't like to get too far. They become magnets. You know, initially they're resistance, and then they become magnets. And so what you'll see is that probably before we close today, we'll work back up to this EMA, And but with this squeeze being so strong, especially on a 3-minute scale, it's super strong. Um, we are definitely going to be probably diving now at 2:30 or 3:30 Eastern time. Sometimes you will see that reversal. If you've had this big of a trend all day, you'll see the market makers reverse things about 2:30 to 2:32, or 3:30 to 3:32. They'll start to reverse this and just get a little bit of, because they've collected today, man. So, and they know that these call premiums are super low. No one's really getting into them, and so they will try to even capitalize and get more money out of retail at the end of the day. Um, and now that SPY and QQQ all have zero DTEs on every single day, once you get in this last 30 minutes and you get trapped in a range, so right now we're at 407, we're in the 406 range. We may not come out of 406 like we saw yesterday. We stayed in between. I think it was what we finished in 410 yesterday. And that's what they'll do. They'll keep you in that range because they're trying to capture those premiums. They're not trying to let the options that they're selling lose any premium, and they're trying to bank at the end of the day. That's what zero DTEs has kind of done that I don't like on the market. Although you can make a lot of money with zero DTEs if you know how to trade them very well. But I always say 70 deltas, and I always put them at least 1 or 2 days out. And I'll be very surprised if we drop below 406. But with the way this market has tanked today, it's definitely a possibility. It's definitely a possibility. And you have some now. Look at these volume spikes. Now you're starting to get that end of day. Guys came back. This is when the really, really big players come in, is at 3 p.m. Eastern. You start getting the guys that are gonna wreck the market, and you want to be on the same side as them. They may pick to just take this trend back up here, so you just want to. Sometimes you'll see the market kind of tank a little bit at like 145 because retail starts getting out, and retail will start looking for new positions to get into. Because they know that when these guys start at 3 p.m., you want to be on the same train they're going on. You don't want to be in the opposite direction, because if you are, it's just not going to end well for you. They're going to take your money. And so look, we're still ripping down, just still. 5 candles into a squeeze, and this is the kind of squeeze that you want to get in. If you were, gosh, I mean, how many squeezes have we had today? There's the red one. There's the nuclear squeeze is what I call it. So there's the yellow, and look what happened on that nuclear squeeze. That's why I call them nuclear squeezes. I mean, they're just high squeezes. Just means your Bollinger Bands are just as tight as they can be inside those Keltner channels, and eventually it's gonna pop. And that's exactly what happened. Just popped. And look, we might go down into the 405 level. They might be wanting to screw over the 406s and go down into the 405 levels now. But I wouldn't be surprised if we bounce close to that 406 level right here, and that's where we kind of hover for the rest of the day, is inside from 406. Let's see. Yeah, let's just say right there. Right there. So good chance that we hover between those. If we break the 406 level, then that I would be kind of surprised, because I think that these guys are going to try to collect that premium unless they're the ones that are in all the puts. So let's see what our flow looks. Once again, I don't see any calls being bought. The only thing I see is puts being sold and bought. This is about as a flow slapping you in the face as much as possible. Even though you see all this bullish stuff right here, that doesn't mean anything. They're just selling puts, man. And but they are buying a crap ton of them. And if you even put this on a single leg, it's even worse. So that, once again, selling them, but they're just. And then once you see these floors, you know, these are guys that are actually on the trading floor. And look at that. There's that 232 trend that I talk about, where either they'll keep it going down or they'll keep it going up. But there's nothing to say that this is not going to break 405.97 right now. It's the put flow is so overwhelming. It's been a strong day if you had puts at the top of this, because now we've hit almost 7 points, 8 points of a drop that everyone in this chat could have had. Everyone. And see how we kind of rejected right there? We kind of worked our way back into 407s. That's simply because maybe that's what they're going to do. They're going to keep it right here between 406 and 407 and not let it fall back. Plus, we got to work back to this EMA anyway. So that's a possibility. Any questions about what I showed you so far? Oh, look, we dropped. Wow. Brutal. Now, let's see. Definitely could be just grabbing liquidity there, taking more people's stops. Because as you see right here, you don't see all the retail traders that are buying calls, waiting for this reversal. They're just buying the mess out of calls, and that's what these guys are doing. They're making it look like, hey, we're gonna go up, and then they still, with these wicks, that's where they still stops. They're stealing them, and they're stopping the calls out. So look, we went right back into 406 just like I thought we would. You know, I didn't think they're going to keep us in the 405 level. Not saying with the way that today's worked, the 405 is definitely a possibility. But they don't want they want those contracts to expire out of the money. That's the whole goal. And so last 30 minutes, if you're in a contract, maybe if you're in puts and you're at the top of that 407 range and you've went into 406, it might be cool to stay in it. But if you're not at the top of it, and you're in a put and you're, say, at the 406.20 range, you get out, because chances are you're not going to make any more money in the last 30 minutes, and maybe you're facing that 330 reversal, and we are getting that slight reversal. This could be a fake out. This could be to get more calls in and then put puts on the market again. Now I want to show you how to set up tick. Now I know some of you didn't attend the call yesterday, but the only indicators I use are PAM, SATY ATR levels, 13 and 48, a squeeze indicator, which you can use TTM Squeeze. I have relative volume, and then I have volume shaded in the background, and you can see how our volume has went up at the end of the day since these guys came in at 2 o'clock. But this is your TTM-A wave. This is short-term momentum. So you can see we have a little bit of short-term momentum. This is your wave C for TTM, for your squeeze indicator, basically. It's all in here, but this is showing you short and long-term. So my long-term is still saying, hey, I'm going down. Like, I know short-term saying, you know, we're going up, but currently I'm still down, man. That, you know, don't buy what they're telling you up here. I'm down. And I haven't even had a bar color change yet. So still, we're still bullish. We're still bullish. And they may work all the way back up to 407 and then drop it again. And you might see that a couple of times. Now let's see what they do. I would assume that we would touch that 13 EMA, and then probably reject off that and go back into the same pattern that we're gonna chop for the rest of this afternoon until about 245 to 250, where you'll get crazy price action because people will start selling their positions or trying to buy them for swings tomorrow. So the last 15 minutes of the day, don't have a position on the market unless you plan on swinging it. Because don't even pay attention to the price action. It means nothing for the next day. It just means that people are panic selling, panic buying. You got a lot of 0 DTE guys that are throwing, these 150-cent contracts in to try to make them go to $3 or $4. And so you're just seeing a lot of garbage noise built into the system at the last 15 minutes. And just like I thought, I drew this line. We dipped a little bit below it. We haven't busted the 407 level yet. This is standard. This is a pattern that the market repeats with 0 DTEs now. Now, if you're in Apple or if you're in Tesla, other stocks that are highly correlated to SPY, you're going to see the same price action. Just because there's a lot of I think Apple is the #1 stock that is in SPY, and then you got United Healthcare, just a lot of the big, really good, solid names that produce a lot of volatility and volume. They're in SPY, and because they're just the most traded instruments. So let's see if we do crack this, and let's go into talking about tick. I think I want to really hammer home what tick is to you, and pay attention to VIX as well. Like my VIX is down here. I don't have a big screen for it. I'm gonna blow up tick, which I never do, and don't pay attention to any squeeze indicator. I don't worry about those at all with tick. So when you're setting up your tick chart, this is John Carter 101. You start out, you make your 0 line. You always want to have your 0 line colored. I put a gold, just make it a different color. John Carter says between 400 and -400 is all noise. And then where are we at right now? We're stuck between 400 and -400 currently. All noise. This is just all noise. When you get up to 600, you've reached some significant selling, but it's just that you have. This is just talking about market breadth and how much buying and selling is occurring, and so you have a lot of buying when you get up to 600. When you get down to a -600, you have a lot of selling going on, and you'll see your bulls taken over when we hit 600. You'll see the bears taken over when we're doing 600 or -600. Now, what happens is often on a day like today, look at if we ever got above that 600 level. Look at that. I mean, hardly ever did we even try to touch that 600 level. We went down to the -1000s, which is extreme selling. That is extreme selling. And in a choppy market, today wasn't as choppy, but in a choppy market, you can do something called a tick fade. Whereas when it comes down to right here, you want to see if it's going to push through here or if it's going to come back. If you see the market go from 0 to 1,000, come back up to 0 and then go back to 1,000, you know that market is bullish, and it is extremely bullish. And then what you'll have is your tick fade play, where after that happens, there may be an opportunity for you to do a scalp, because you don't stay at these levels for very long. You can see this is a 1-minute chart. You don't stay at this level for very long. You touch it and you go. And then sometimes, like yesterday, you'll stay there for a little bit longer. I don't even know if that's yesterday, but you stay there. And sometimes you'll get down, like when Powell speaks, you'll get down in the 1500 levels. and that just happens. So, but look at what happened today. We started off with a tick fade play because the first thing we did at open was start at 1500 and then we just dropped. Sorry about my dog. And that's what we continue to do. And then as I'm going out through the day, I'm looking for if tick is swinging. I talk about swing highs, swing lows all the time. Those are the most important things that you can monitor as you're actively watching that price action. Did you break that swing low and make a new low? Or did you respect that swing low and now you have a higher swing low on your next one? And what I talk about when I say swing low, this would be a swing low, right? This is your swing high. Did we do anything to break those? No. We were choppy. But here we go. We had a swing high. And we made a new swing low. So we did make a swing low right here. We made or a higher swing low. And then we made a lower swing high. Then we made a lower swing low. And we made a higher swing high. And then all of a sudden, we don't go above 600 at all. The rest of the day, in terms of bull market, we are in noise. But in terms of bear market, we have visited the 1,000 range so many times. And this would have kept you in all day long. You would have never exited your position because your tick is definitely telling you not to get out. Now look, at the end of the day, what I tell you, at 245, we get this craziness where now, for the first time all day, this is going to be one of our highest tick readings since open. Since open, it's one of our highest tick readings. And let's look where price action is. And they pushed it up to 407 with the craziness. Do I think we'll close in the 407 range? No, I don't. I think they'll bring that price back down. But I could be wrong. I don't think that they'll allow those premiums to stay in the 407 range unless you're just trying to burn the 406s now. But typically, once they've selected that end of day price range, they kind of stick to it. Now, this is some of the first really bullish action that we've had that has went above the EMAs since almost 3 hours ago, 2.5 hours ago. The first any kind of bullish sign that we've had. And what are they doing? They're faking it out, and they're going to bring it back down under 407 and screw the guys that just bought those calls, most likely. Now, we are going to retest that 13 EMA. Maybe they find support, maybe not, but I think that move right there was just to get some people buying some more calls, so those premiums collect even more. And look what happens. Where are we going? We're going right back in those lines I drew because that's how they manipulate the market. Understand that this is all an algorithm. It does have to do with volume, but the only reason it has to do with volume is because that's how many shares are moving. That's what the algorithm is moving. And let's look at our flow now. Let's see. I bet they had some bears get in on a call. No, or nope, nothing. We still have not sold one call since then. That was our last call of the day that was actually sold as a position. Some guy lost 103,000 today, unless they got out, because this is a single leg. He doesn't have it in a spread. There's no multi-legs, nothing. Just spent 103,000, 1,535 contracts and lost all of it. This is just someone selling their very profitable position at this point. Just look at that. I mean, and so that's kind of what I wanted to touch on today, and why I went off on my little rant in the room, because this morning I was looking at Gamma and Vanna and all that. Well, this afternoon when I got back, I was looking at all that stuff, and it's a bunch of data, and it's super cool to look at, and you can get caught up in analysis paralysis. What I want to tell you for everyone that's in this room right now is to keep it simple. The KISS methodology works. Keep it simple, stupid. Because if you try to overcomplicate this and have too many indicators, too many things of data that you're looking at, you just get caught up into trying to predict what the market's going to do. And I say that you then are trading in your head and you're not trading the chart in front of you. When I took that call earlier, I traded in my head. And I'm good about resetting myself. So I realized, holy shit, I'm just looking at way too much data, and I'm trying to determine some ridiculous algorithm in my head and saying that we're gonna move this way. Now look, we are getting some momentum. I would be very surprised if we stay there. And let's see if they got any whales to buy a call yet. No. So that's mostly retail hopping in on that bandwagon, and that's what I told you. That's these guys at the end of the day taking those 50-cent SPX lotto plays that you'll see posted on Twitter all the time, and they're YOLOing right now. They're going to post on their Twitter this afternoon. Oh look, this went from 50 to 450, for 400 per contract, and I did this just looking at volume on the cons and all this other stuff. It works. They miss more than they hit, and I think that for a sound trading strategy, you got to take 70 deltas, and you want them at least 1 or 2 days out. I mean, that's really what it comes down to. Hold on one second. I tell my dog to be quiet. Blue, shut up, Goofy. So I want to leave the last couple of minutes just, up to you. What questions do you have about what I just showed you, and what's your experience? Do you agree kind of with what you heard, or today, if you were in puts, you're very happy, but if you tried to get any reversals with PAM, you would have been very disappointed, except this last one apparently, because we are moving up, and hey, my calls are now making money. Or they're not making money, they're getting me closer to being out of the red. So, but let's see if we hit this 48. Once again, if we were using our 48 as our stop loss, now we'll just pretend like that's what we were doing, and we'll calculate what our profit would have been if we would have just maintained that 48 stop loss. And I'm not saying you do that right out the gate. Like, you don't want to just say your 48 is your stop loss right out the gate. You want to use PAM, right? But once you get into the significant trend, Blue! Stop! All right. So once you get into the significant trend, you want to use that 48 as your stop or your swing highs. But I would even caution like that if you're on a strong trend day like this, because this was so beautiful. I mean, I'm sad that I had the appointment this morning and I didn't get in right here and are right here and be in this trade. I mean, you had 2 opportunities to really get into solid trades, and Pam right here was really honest with you, because you do have your EMAs are already separated, and she's giving you another signal to say, hey, I'm still going down. And man, did it ever go down. Now, we've worked up to 408, which is kind of surprising. That I think what you're starting to see is those YOLO trends, those guys at the end of the day putting out, all these the signals to people, and saying take this position, and now we have this result because of the zero DTEs. And you do get a good trend, like I said, from 230 you get that reversal, which is what I told you. But oftentimes that reversal will just stay in here. But 230, there's your 230 reversal that I talk about. When you've had these strong trends all day, sometimes you get that 230 reversal. And then we would have got stopped out right there. I mean, let's just say that if we were doing our 48, there was our stop. So at 408.21, and we got into this trade on the last PAM signal, 413.85. That's 562 or 564 of a move, $5.64 of a move. And man, you would sleep like a baby tonight. Sleep like a total baby. Now look at what we're doing. Did they really? I hope they weren't just capturing those premiums and they're going to move it back down to 406. That's brutal. That's so brutal. Maybe that's not what they're doing, but they're evil. So, wow. Now a lot of these are the YOLO, or they're selling their positions. We're gonna go back out and test that 13, but I bet we blow through it. Look at our flow data. Again, this is all retail. There is not one whale that has came in since 233. Not one whale. So the whole reversal that you saw was mostly just retail doing their thing. And now they're selling it off. Now what you look for on Fridays, because Fridays, you know, I don't know if you trade on Fridays a lot, but Fridays are dangerous. You have a lot of contracts expiring, and there will be massive manipulation. Just trade the way I just taught you. Put those tick levels on there: 0, 600, 1000, negative 600, negative 1000. Use your 13 and 48. Have your relative volume. You don't even need the TTM, these wave A's and wave C's. Don't worry about those. We'll set those up later. We'll have a whole video on them. But the grand scheme of it is, the ones that's yellow and black, or yellow and brown, that's your short-term momentum. And the bottom one, the blue and the dark blue, or the cyan and the dark blue, that's your long-term momentum. And you know, and that's exactly what happened. We got a signal to say, hey, we were going to go up from the short term. It's exactly what we did. But long term still says, hey, we're going to go back into this downtrend. And now we're starting to get a little bit momentum up, but it wasn't hopping on the bandwagon initially. So, and look what's going on. Are we going to go back under that 407 range before we close? We have 3 minutes. And if we do, we've screwed the 408s and we've screwed the 407s. They got 2 minutes. Oh, there they go. We'll see. But you had your 230 for a reversal, so always remember that. Try to get out of your positions that have been trending all day prior to that 330. I would even recommend the 2 o'clock range, because there will be a push to try to reverse it right then. And if they're unsuccessful, they're going to try even harder at 230. They're just going to try much harder. And so that's what they did. And sometimes you will get the trend continuation, but just I hope that this 1348 EMA strategy with PAM, you really understand that, because that's the key to PAM, is her work with the other areas of confluence, and then drawing these trend lines and making sure that you're not going outside these trend lines. I would draw another trend line like from here to here, because that's my new swing high. I want to see if we ever bust that swing high. And if we didn't, then I know my trend's still good. You know, and I can extend it, and I use really crazy colors just because, I don't know. Where my extension? Sorry. So again, you know, you could use this as your stop loss too. So you would probably have gotten out right here. And what would that have saved you? You could have gotten out right here, but you would have waited because we rejected so many times right there. But you would have gotten out right here, and you wouldn't have gotten out at 408. You would have got out at 407, and man, you would have been sitting good, sitting really good. Saved you a whole $1. But look how long that trend. Look how long that trend lasted. It lasted forever. Forever. You could have just followed that line all the way down. And so we did close at 407.14. So not bad. And that's it. Do you have any questions that I can answer for you? Is there a topic that you would like me to cover? Now I've talked for a good hour, so I want to hear what you have to say. Anybody? Did some of y'all fall asleep? Do what now? Yeah, it's a lot, man. But this is a simple strategy. It's not complicated, and you don't want to get caught up in trying to handle too much data. If you can look at that 13 and 48 and make sure that it's aligning with what PAM's telling you, you know, use PAM stop loss initially. But then as you get into that trend and you drop lower, you either use your swing highs, like right here, there's your stop loss. If we're going to continue this downtrend, I'm going to put my stop loss right there. And as we go down, there's a swing low. I want to see if we break that. I want to see if this works back up. Are we going to come back down here and break this? That tells me that we're going to go back into my trend, and that I'm not going to move out of that position. Always, 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 and PAM initially does this for you, but always try to keep track of your swing high and your swing low of the previous swing. Because it's going to tell you so much about what you're doing. It's going to tell you everything. Look, you never broke this, so you knew to stay in there. That's a swing high right there. You never even got close to it. You knew that trade was going to be good. There's your next swing high right here. You're still good. You're still good. All the way down, you're just good. And I'm telling you, it's that simple. On a trend day like this, it's that simple. And we'll get into chop days, and I'll show you how to use PAM to trade in chop days, which is still phenomenal, actually. It's just a different type of trading. Just draw those trend lines, track your 1348, keep track of your ticks, and watch these squeeze indicators. Eventually, it's like riding a bike. You'll just be able to get on, look at the chart in about 10 seconds, digest exactly what's going on, and be able to understand what you need to do. And before you ever start trading during the day, make sure that you have a trade plan. Make sure that you've looked at your market when you've added the levels, and you say, okay, if it goes, this is my last swing high, this is my last swing low. If I break below that swing low, I know that I can probably take puts. If I come back and retest that swing low and I reject, I'm probably good for puts. The same thing with calls. If you have a call and it goes above your swing high, then you know you can come back once it retests and take calls. And a lot of times what you'll see is PAM retest. She retests the supports because that's what the market does. When it's deciding on price action, it's going to retest. It's going to make sure that the imbalances agree. But I got to go pick up kids from school. Thank you for attending. We'll try to do, at least 3 of these a week. And I'll try to, be more consistent about like how I approach the videos, but please leave comments in the normal chat about what you'd like to see, what things you'd like to cover. If it's just live trading, then that's what we'll do, right? And I don't mind doing those either. But thank you so much for attending, and it's very much appreciated. I'm happy all of you are part of the group, and I promise that this year is going to be all of our best year of trading. But have a good day. I'll talk to you later. Yep.